Hey guys, welcome back to another episode. This is my weekly series where I take a quick look at 4 stocks I'm looking to buy this week. Like many of you, I put money to work on a weekly basis, and every single week I'm either looking for new positions or old positions to kind of build my portfolio. This kind of method has been working for me and has helped me build the 6-figure portfolio that I have right now, so why stop now? So on today's episode, I'm going to explain the 4 stocks, and I'm going to give them to you right in the beginning just so you guys can, if that's all you want to care about, that's all you have to listen to. But throughout the episode, I'm going to explain a little bit more why I am interested in these stocks. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment where I have 10 free stock ideas, and I also have my weekly newsletter where I share all my information that I have right now in the PowerPoint presentation, and it's yours for free. Again, the link should be down below. So let's get right into it. The 4 stocks that I'm looking for this week of November 14th. First is going to be Mercado Libre. This is traded on the ticker MELI, and this would be a tier 2 stock in my portfolio. I do own it already. I've done a recent video on the earnings. Company is still seeing massive growth in revenue. They're improving and having a huge strength in their logistics, which is something that is needed for the e-commerce market. I enjoy the price point near the $15.50. It's a little bit higher than that right now, but great candidate for dollar cost average in my opinion. Second company is going to be PayPal. This is traded PYPL, another tier 2. Company has kind of seen has seen a slowdown in revenue, but if their new products can attract customers like the new application, I do believe it's sitting at a great value point. I enjoy the price below $230, and I think right now it's in the low 200s. The third company is going to be Disney. This is another tier 2 stock. None of these are tier 1s, and none of these are tier 3. And again, the presentation, which is free, will be coming out after this video in the next few hours. But Disney tier 2, analysts were expecting too much for this company in their most recent earnings, even though CEO did share warnings early in September. So I think this is just analysts being a little bit too excited about Disney, and I enjoy the price point right now. Enjoy price point below $170. Disney streaming market I think is super strong. Their overall IP and products that they own I think is one to definitely have in my portfolio. The final one is going to be Facebook, and Facebook is one, or Meta platforms, right? Traded on the ticker FB. This is another tier 2 company. I mean, this is one I've talked about way before the Meta. It's been in my portfolio. It was a tier 1 for me last year. Is doing amazing for me right now. I'm still very heavy in the social advertising platform. That's still super strong. I'm also enjoying how Facebook is becoming more of a content creator platform as well, focusing in stuff like videos to just grab more audience. And finally, obviously the Metaverse. And even though the Metaverse is far off in the future, I can personally see that kind of the technology advancements is just an extra leg of the social platform world. So it makes perfect sense for me. I do enjoy the price point near 330. I think today kind of did a nice run up, which might be a little bit high. Again, a nice dollar cost averaging. So if that's all you're here for, make sure to sign up for the newsletter. But if you want to check out more stuff, let's go back into it. So right here, do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. Fundamentals, right now, Meta platforms or Facebook is down about 9% from its 52-week high, from its off highs, right? Not 52-week high. Mercado Libre is down over 17.6% from its highs. Disney is down about 21.69%. And then we have PayPal down over 31.25%. Like I mentioned, I do believe PayPal and Disney are giving us for reasons, right? They're definitely seeing a bit of a slowdown right now, so they're definitely a nice value off from their highs, but I believe they're sitting at super attractive levels for sure. So let's just jump into MELI. Right now sitting at 16,037, and if we take a quick look at technicals, right, not overextended at all. I enjoy it a lot. MELI, what am I super excited, right? Most recent revenue They saw revenue growth of 72.9% year over year on an FX neutral basis. They're seeing revenue growth strong in their three main markets: Brazil 69%, Mexico 76%, and Argentina 83% year over year, all on FX neutral basis. Some other things that I really enjoy about Mercado Libre, and for those that are not familiar with Meli, right, this is the e-commerce platform in Latin America. They do things like e-commerce, they do things like fintech, and they're seeing growth, right? They are focusing in new products developments for the e-commerce. For example, they're moving into the grocery kind of e-commerce platform, and they're seeing good tractions there. They're also enhancing things like loyalty programs and improving their shipping and logistics platform, which I think is super impressive. I mean, 80% of items were delivered within 48 hours this quarter. Again, I think in Latin America, that is such a huge strength. Now the second company is going to be PayPal. PayPal sitting at 212. Like I said, I really like PayPal under that $230. If we take a quick look at charts right now, I personally think it's looking very attractive. One of the biggest things about PayPal is they're kind of really making this new PayPal app. They want to make like this only one fintech application. There's obviously other platforms out there and other applications that are doing the same. PayPal, I think, has some form of strength due to the huge numbers that they're working with. So if this application can grab traction, I think it could be a very good move for PayPal. Their total payment volume was $310 billion this most recent quarter, up 26% year over year. They are seeing a bit of slowdown in their eBay merchant solution. So if we exclude that, it was actually $300 billion in total payment volume and was up 31% year over year. Venmo, their digital wallet application that many people use, is 60 billion of that 310 total payment volume, and that was up 36% year over year. Active users 416 million, up 15% year over year and 3.2% quarter over quarter. Like I mentioned, that new application to become the only financial app needed, if they really see this, if this application starts to get traction, in my opinion, I think it would be a big move for PayPal. They also are releasing new crypto products like cashback with crypto, releasing crypto in new regions. Recently, they just expanded into United Kingdom. So they are kind of creating new products that are grabbing attention to the younger generation. So I'm really liking PayPal. The third company we're going to take a quick look at is Disney. And Disney right now is sitting at $158. Like I mentioned, I really like Disney below that $170. I think right now it's sitting again at a very attractive levels in my opinion, especially if they're able to turn things around. Disney is probably one that might be very quiet for some time until probably, I want to say 2-3 quarters, until subscribers start picking back up for Disney Plus. But Disney super excited about just their overall IP. They have Marvel, Star Wars, Marvel, Star Wars, everything in there, the theme parks, the cruise lines. If we take a look at their most recent earnings, they have 179 million subscribers in their total streaming subscription. This includes Disney Plus, which is 118 million, and that was up 6% year over year. ESPN Plus, which is 17.1 million, that was up 66% year over year. Hulu, which is 43.8 million, and that was up 20% year over year. Disney also has strong growth plan for Disney Plus. I mean, right now they're seeing a bit of a slowdown. COVID kind of created what I call the COVID lag on content. A lot of the content that was expected to be released this year is now being pushed back to later next year. So it's kind of pushing a bit of a lag on the pipeline. That lag on the pipeline kind of reduces, in my opinion, the reason for people to subscribe to Disney. The CEO did warn about this slowdown before. I guess people just don't listen. But to me, I think right now sitting very attractive. I just did a video on their earnings, and for the daily, they were in the top 10 daily grossing on Google Play for certain countries. I think it was United States, it was Canada, Brazil, and I believe United Kingdom. They were either in the top 10 daily grossing app or top 10 daily download, or sometimes even both. So the growth plan that they have, like new promotions that they have right now, is kind of helping build more traction to their subscribers. The final one is Meta Platforms, also known as Facebook, or also previously known as Facebook. So right now, why am I excited about Facebook? So right now, current price 347. I really like it below the 330 levels. It's kind of run up right now just because this overall metaverse word is becoming a new meta, in my opinion, for investors. And but we can see I really do enjoy it. This one might be a little bit overextended. I really like it around that 330s, maybe 340s even. Facebook, when I'm super excited, like I mentioned, their social platform is still going strong. They're becoming more of a creator platform, which is driving more and more users to their applications. But more importantly, I think their AR and VR technology, depending on wherever they take it, if it's not even the metaverse, the steps to get there and improving this technology, I think, can be a huge growth for Meta Platforms. So if we take a look at their most recent earnings, $29 billion, up 35% year over year. Family monthly active person was 3.58 billion, up 12% year over year, 2% quarter over quarter. Again, Facebook super excited that they are really focusing on their AR, VR products and services. Again, not only just for the metaverse, right? That's the end goal. But every step that this technology is gonna make and improve, and all the other and the new applications will be able to play with or use throughout those steps, I think are really gonna help Facebook in their drive to more users. Finally, I think the end step, the metaverse, is a great leg for their social advertisement platform as well. So these are the 4 stocks I'm looking at. Make sure to sign up for the newsletter. Let me know in the comments what are some of your 4 right now, or what are you looking for this week. Take care, have a good night, and see you next time.